Hey everyone, welcome. Bob Kendall here. Give me a sound check. Make sure everything's working good here. Uh, Let me know how it sounds. Thanks. Awesome, everyone. Just for a heads up, Jason's online here, and he'll be helping you guys out a little bit on the timeline. So watch for his comments. He's kind of helping me out, monitor the chat line and all that stuff. But give us just a minute. I want to get a little more traction on the few more people on board, and we will kick this puppy off. Okay, folks. Good morning, good afternoon, wherever you are. It's morning out here on the West Coast, so we're still trying to get the day going yet. Um, anyway, lots going on in the markets. This vertical move in the markets, it just won't stop. And I'll go through some of the details. Just a quick little house cleaning. If you guys have signed up at the Kendall report and give us your email, just be patient. We're putting some content and some stuff together for you guys. So we're really looking forward to really getting engaged at the next level. Just so you know, we're amateurs at the retail market, so we've been a little bit overwhelmed. We've had a lot of good response on the channel, so that's an excellent thing. But just trying to figure out how to deal with it and how to do some of the things that we hope to be able to do on the retail side of the market. And I have to tell you this: I love these live streams. They're a lot of fun for me. So make sure you guys get your questions together, everything that you're going to want to go through. I am going to talk more about the market grid that I've been putting out. I want you folks to get used to watching these numbers, especially the short-term traders, but even for traders that are looking at positioning on daily, weekly, and I'm gonna bring up the entire grid just to kind of discuss what that thing's all about. And in fact, yeah, just real quick before I get totally into flow here. Yeah, gold is not doing well. you know, it's one of the things that I talked about in last night. Um, Gold just can't get out of its own way. And I'm going to go through. I'll talk a little bit about gold later in the show, and I'll also go through. We'll take a look at Bitcoin, and if I get distracted and going through stuff, just remind me if you anything you guys want me to watch. I'll try to hit some popular stocks and all that kind of stuff, and all that. So while we're still getting some traction on the channel here, let's go ahead and just talk a little bit about the S&P and what's going on here, and then we'll get into talking about some educational stuff, how to use these numbers, how they're going to help you get things going. Um, so let's go over here and take a look at the S&P. We did print up above the extreme for the day. And those of you that watch this, and I'll go through this in detail in a minute, if we close above the extreme today, that will set the tone for a 2 to 3 day flat to retracement. So, but there's not a lot of downside in this market right now. That's pretty obvious, right? But the patterns that are unfolding here, I've talked about this on the nightly videos, is we're just climbing this channel here. And there's nothing at all that's gonna break this thing at the moment. Obviously, we've seen, all the crazy unrest that's going on in the country, just everything, how crazy things are, and this market just doesn't care. It just keeps going up and up. And I'll talk about some objectives. I've seen a few questions here of folks talking about, objectives and things like that. So let's there's not any real Fibonacci projections out there right now, but I'm going to go over to a weekly chart here on the S&P. And I mentioned this on Monday's video, but the weekly and the monthly charts are the only place you're going to get a really good feel, although the dailies have kicked in pretty good. We're really looking at this acceleration here, and there's a real key number I will tell you right now. It's 3109. Mark your books on that one. That close above that on Friday is just going to really that's a major deal, and that's going to give us a close on that will give us and I'll work on some of the details here, but I would call it a 60% probability we're going to test the all-time highs. As crazy as that even seems to say right now. I just want to, just looking back at what we've been through over the past several months, which has just been outrageous as far as, outrageous as far as the markets go and how they're acting with the backdrop of the fundamentals, right? We all know that, this detachment. And, a lot of folks are talking, it's kind of getting to be an old story, but we got all of our gambling buddies coming in. And if you're online, thanks, welcome to the world of trading. It's not as easy as they think it is. I think I've had the opportunity to talk to a few folks, and I already know they're being taught some of the wonderful lessons that this market will teach you about trading. As one of my old buddies on the trading floor used to say, it's never easy. If you think it's easy, you're in the wrong place. So what we're seeing here on these weekly charts, though, are just this massive acceleration. We still have not kicked in on, as I talk about the PPMs a lot, and the PPMs tell us a lot about the angle of attack or what type of trend we're dealing with. And PPM 1 here is at a plus 2.04. Anything over 0.25 is a trend. So this is what, 4 times the trend? 5 times? So we're looking at this massive trend. Underneath here, the major support, I could tell you with confidence, and it's a long ways away, but 28.72 is the major pivot, the major support under this market. So we're just going to talk intermediate trends here for a few minutes. And what's happening here is we're seeing this channel start to flatten out a little bit. And, I talked about this on Monday night's video. Let me just put this numbers up here. Let me put part of the grid up. I'll bring up the rest of it here in just a minute. But if we look at the grid for this week, we're looking at, we went above the 3101 level, which was R2 on a weekly basis, and then R3 hit is 3132. And there's some numbers we had 31 17 was the extreme for today, and we are seeing a little bit of backfilling. When I go into talking about some of the concepts and ideas and using the grid, I'm going to bring up some short-term charts, 1 minute, 5 minute, different elements, looking for pivots that happen around these numbers. And that's for the short-term trader, that's how you're going to be using these numbers, is trying to come up with, looking for the number to be hit or the market or getting close to it. Is sometimes they're amazingly accurate, and other times you just kind of get up close and then you watch for the reversal. I've been putting some tweets out. If you're not following me on Twitter, do that. It's Twitter at Portfolio Expert, and that is no E in the expert. Okay, so but anyway, if you follow me, I've been putting stuff out to kind of trigger you folks that are following me to kind of look at these numbers and look at the markets and start to compare them. But this trend that we're seeing here is not over. A lot of times, and one of the things you won't see me do on any of my analysis is ever draw a trend line. I hate trend lines, and I won't go, maybe that's for another show, another time. I'll talk about that. But trend lines tend to limit where you think markets can go and what they will hold, and there's oftentimes very subjective, and I just don't like them. I do use, the trend lines I use are moving averages, and they're dynamic and they adjust in the markets. The PPMs that you see, there's actually 4, but I usually only show the 3 of them, PPM 1, 2, and 3. What they do is measure the angle of attack and gives some probabilities on those values being, whether they'll hold or they'll be broken, whether it's up or down. So those are the elements that drive my analysis that you see on the channel every day, and anything that you see from me, including our models and our research tools, all that stuff, all are driven by these concepts. And I've been running these the models. Literally, they were developed in 1986. They've been in code since 92. Jason would remember. he never forgets anything. But they've been around for a long time, and the code that's in there has been really solid, and it continues to be some really good guidance for different levels of trend. So let's take a look at, let's go one more level. You can see what's going on here. Let's go to the monthly, and then we're going to dig into the grid and a couple other things here. So I discussed this on Mondays, or Sunday night / Monday commentary. This is really interesting what's happening. The volatility that we've seen over the last 3 months is just blowing up. And I talked about, I've still got the grid on there, and these volatility lines, they're expanding. It's very similar to what happens if you've used Bollinger Bands, in that you get this volatility expansion. The only difference is you've got a center line with Bollinger Bands, and then you've got the 2 extreme, the outside bands. In this case, we have lots of numbers to pick from, and this is another number. In looking at objectives and people asking about where's this thing likely to go, we have a number. One of the things I always look for is a clustering of these Fibonacci numbers on a grid, and so we're looking at R1 is 3182. So the absolute minimum for the month of June for this market to go to is 3182. If you look at R2, R3, and the extreme for this month, which is all the way up to 3600, but you see 3336 is R2. So we're going to test, it looks to me, for the month of June, we're going to test this 3182, and based on the momentum and things that we're seeing, we're probably going to see this thing move move above that level. We'll just have to see what the configuration is. And those of you, I guess trolls exist. I love the internet. Anybody that hangs around me, I absolutely love the internet. Love YouTube. I love comments. I have no problem with you folks making comments, disagreeing with me. Just don't go personal and call me names and do stuff, because I will take you off, because I don't know it. None of us need that stuff, right? So anyway, but when we look at these long-term charts, you're seeing PPMs all in trend mode on the monthly or the secular trends. And if we would have stayed down below the 2400 level last month, 2 months ago, we would have seen this stuff roll over. It didn't roll. In fact, we're seeing a continuation of the expansion of the momentum on the upside. And it's really, it's I don't even know the right words. It's kind of, it's boggling what's going on here. And this thing is, like I said, minimum for this month of June is 3182. It's very likely we could see 3336. This thing doesn't, this thing is got a ways to go. And looking at a lot of the indicators, somebody just asked, somebody just asked, do you think it's extended? Yeah, sure it is. But we're not seeing the type of characteristics yet that we're going to get any big major reversal. And in fact, what we're seeing is the trends are continuing. Now, I don't have it up. I will put it up in a minute. It'll take me a minute. I'll do it off screen. But our database is what also drives a lot of my analysis. Now, we watch nearly 17,000 symbols utilizing the same methodology, the same models. We have 2 primary models. We optimize them to the best model for the individual symbol. And that database is on an intermediate basis is now up to 30%. If it gets over 42, then we've got a sustainable trend. But what we're seeing right now is a lot of stocks rebounding. We're seeing a lot of this, expansion of the number of trends. So when I show you guys the database, what it's telling us is how many stocks have entered into trend mode. So, and I'll bring that up in a minute just to go through that. And then we'll go through and probably do 15, 20 minutes on looking at the grid and talking a little bit more about the grid. But all of this stuff is when you start to see when you look at the database, when you see this traction, like right now, it's roughly 85% of all of the stocks in our database. I'll show you. Let me just bring that up real quick. Bear with me 1 second. I'm going to do this off screen so you don't have to you don't have to watch me log in here. Hang on 1 second. So yeah, but all of these trends are very, very bullish and not going anywhere. And we're seeing we're seeing it actually. We're seeing an expansion in the number of trends out there. I should have this up. I'm just about there on the other screen. And I'll drag this one over. Okay, perfect. Okay, so I'm going to show you the, this is the database on the WaveTech Research Tool. This is the database showing you the 16,651 symbols. Right now, there's 5,098 long, 30.62%. We only have one sector, and we have our own proprietary sectors that we use. They are, it's technology, up 6.8, but we did get buys on consumer cyclical, conglomerates, and services on Monday. So those down below here, a couple negative, positive. Conglomerates are working. There's only a couple days on this signal. But what I want to show you here is if we flip it over to a daily, you're going to see what I'm talking about. 85.86. So, I mean, this is an amazing number, folks. This is the this is more or less the craziness of the backdrop of what we're seeing. There's 85.86% or 14,296 stocks, ETFs, mutual funds are in a trend mode now. They're all uptrending. You folks hang around this channel and you're going to see you can't ignore that. And that number has just skyrocketed over the last, let's say the last 8 weeks as we went over, even before we went over 200, this started to get serious traction back on 325. That's March 25th. That's when this thing early on, a few days after that big 11% gain. I saw an old video that I had up there that I did on the 25th, and I basically proclaimed there was a bottom. The trends were still down then, and the short-term trends were drastically down. And guess what? We consolidated. We got buy signals down there. We started to get traction in the database, and we continue to see this thing rotate into where we are today. And so, the markets are very dynamic, and you're going to always see me go with the flow, otherwise the flow of this database. And you'll see that we also have the VPM. VPM stands for Virtual Portfolio Manager. The VPM universe has been positive now, current duration 25 market days. And it kind of gives us a feel for the entire database that we have a positive trend on a daily basis. And you can look across. There's only consumer non-cyclical is the only sector that does not have a long position at the moment. And you can see the other thing that you'll see when you look through the database, we have a complete map on everything we do. So it tells you, like, this basic materials has been long 8 days. Now this is on an index level, on our own proprietary index. It's 7.2% gain, 8 days of 35. And what that means is normally this signal lasts for about 35 days. I can click on this little T button here, and this might be a little small. I'll see if I can make it a little bigger here. But this is the stats of what this thing looks like. So this is the map. It tells us that typically the projected profit was 5.6, standard deviation is 11. It's already at 7, so it's exceeded the mean. But I just want you folks to see this, because this is the kind of power of understanding. So when our models issue something, we know what we're likely to make, and this is just on an index, but what we're going to make, how long we're going to hold it, everything about it, so you're not flying blind and you know what the expectations are. And so, so anyway, enough of that. Let's go ahead. I want to bring up one more thing. It'll take me just a second here. All right, so what you guys are going to see on the screen is the market grid, and I need to get a better way to put this on the screen so it doesn't. Let me just see if I can reduce this. Nope, not going to work. Bear with me 1 second here. There we go. So I'm going to go back to TradeStation here. And one of the things this was what I was just talking about on the grid itself. And uh, all of these numbers get, all these numbers are related as you look at them. So for instance, Extreme Today 2017, we start to go over, we start to look at the grid on the weekly. Now we can, if we always have numbers to look to most of the time. I've never seen us get outside of the entire grid because we have daily, weekly, and monthly grid numbers. So the grid numbers for the monthly is giving us expectations as I went through just a little bit ago. Now you can see I'm on all one grid here, and this is important. So for today, 31.1770, we printed 1995. We're trading 13s right now. So we've kind of hit that extreme. It spiked above it, got a little reversal. We'll take a look at that in a minute. But then if you get above something like that, so what do we do now? We exceeded the extreme of the daily. We start looking at see if there's anything on the weekly that corresponds. And so I tweeted out earlier today that the next target is 31.32. That's on a weekly basis. So the expectations for this week, here we are midweek, are 31.32 is resistance 3 on the weekly. Now and then as I discussed in the previous, just a few minutes ago, is if we look at the monthly, the very first big resistance number on the monthly for the month of June is 31.82. And then you can see easily, this is what I was talking about, the acceleration, easily you can get to 33.36, 34.91. These are all very strong possibilities, and that 34.91 is all-time new high, which is, yeah, it just sounds crazy saying that, knowing where all of us were and how we were all feeling locked in our homes and everything that was going on. And but the whole situation here is this is the grid, and this is some of the basis of how to look at these numbers and how to trade. So let's reduce the time frame on this chart down to a 1 minute. And so this is one of the things I'm working on, folks. I've had an opportunity to talk to several of you out there that have been on the channel. And one of the things that this is the grid for on a 1 minute basis. So I'm trying to figure out how to get this on a platform that you folks can use it on any symbol. I just happen to have, this is the cash here, but it's giving you the high range. It's giving you a range of a whole 60 cents for 1 minute. But what I want you to see here more than anything is when you see these reversals that happen, probably the best thing that we're going to do is probably go to a 5 minute graph here. And so you can see that this band that we've been in, I've got a model on here. It bought yesterday at 10 minutes till the close, which was that huge rocket ship rally that we had late yesterday. Matter of fact, this is the cash. Just surged into the close, and then of course gapped higher again today, and we're just consolidating up here because the machines are running the markets right now. But this range that we're seeing here, what you want to watch for is when we get to those when we got to the extreme today, 2017, watch for like a 5 minute or 15 minute reversal that you can trade off of that number and set up your trades. And at some stage, I will go through patterns and how to set up those trades. I'm trying to figure out exactly how to get this in a format and have enough time that we can actually go through that and interact. So anyway, we're going to figure this all out, folks. Once again, I seriously appreciate everybody that's participating in the channel. And I was talking to someone the other day, and one of my goals for the channel is I really want, you know, I've been doing this a long time. I've got a lot of experience. I have a lot of statistics and well thought out strategies here that I'm going to be exposing you folks to, and I really want to build a community. You know, when you someday when we all hopefully get old, you know, you got a life's work, you get an opportunity to really build something around it, and that's really what I'm excited about addressing the whole retail community to start with. But anyway, so you got a pretty good feel for the grid. Let's. I saw a question. Somebody asked this earlier, and this is the. These are the charts, the daily charts. This is the S&P versus IJR, and I've talked about this chart for a very long time. Is what we're seeing is that we're finally seeing some traction, and where the small caps are starting to outperform the large caps, and that's going to be very significant in for this market to continue. You know, as crazy as it seems, if this thing is going to evolve, the S&P, the markets are going to evolve into next level trends, where the intermediate trend kicks back in. The long-term trends, as I showed you a few minutes ago, are still very much intact and still happening. But this chart, it needs to happen. Now, this is a daily graph here. If we go over to this one, this gives you a bit more perspective. This is a monthly, so it's a little blip on the chart. We've seen these happen before, but this is a pretty good starting point, and all it will take is for a 3 or 4 month outperformance by the small caps over the mids. So there's probably some pretty good trades to put on, some of these spreads to put on. I've never really looked at ETF trades where you could actually do a one-time short S&P against the, or I guess, you know, against a IJR or something like that. You know, I'm not sure. That would be a pretty aggressive way to play it. But anyway, or you could do a ratio trade where you put 2 IJRs, ratio, let's say 200 shares of IJR and 100 shares of SPY, and that would give you that ratio to play it as well. And you know, that's another way that you could play it on putting a little leverage into that strategy. So I'm going to look at the timeline now and just see the chat line and just see what we can pick up. Yeah, so you know, we saw a little bit of hype again on the whole vaccine situation. You know, yeah, I don't want to get too much into this stuff. Listen, everything that we saw around the coronavirus ended up, you know, the models, everything was pretty much wrong. You lived in New York City in high concentration. There was definitely some issues there, but everywhere else not so much. But the you know, as far as another wave coming and all that, this is the good thing, folks. Hang out with me. Hang out with this old guy, because what I have is a process. And anybody that tries to run this market without a process is not going to do well. So, and we'll touch on a little bit on the airline stocks and some of those things. The good news about what I do and what I'm showing you folks is when this puppy rolls over, we're going to be out and we're going to be short. Yeah, we were selling on 2/28, February 28th, and on January 21st was when our database started selling the heck out of the stock market of this year. So we're a little bit ahead of things, but you know, things become obvious when you're only looking at an S&P index and trying to make decisions, it's really hard. But when you're looking at 16,500 symbols and watching a database rotate, you can see things that you normally don't see. And those are the things that I'm always going to be talking to you folks about, because it's the perspective of being able to watch a lot of items at the same time with the same methodology. You know, one of the things I've preached, I've taught a lot of traders over the years how to trade. And the one thing I preach is consistency, to find out what you're doing, how you're doing it, and apply that same thing over and over and over again. And that's super important from the standpoint of what goes on with being a good trader and coming up with that consistency. You know, trade what you know and know what you trade. One of those. So anyway, let's take a look and dig through some of these. You know what I want to touch on real quick here. Let's take a look at a couple items that I cover often on here, and let's take a look at. Let's go to gold. Gold's got absolutely hammered. It was. Let me get to a daily graph here. I mentioned that we had a long trade on. This is an example. We just blew out of this trade. The model's kicked out. It just failed. Yet when it started to roll over, PPM started to roll over. PPM 1 minus 0.34, PPM 2 0.05. This thing just rolled over, and when we look at the weekly, you'll see we've actually taken out some pretty significant numbers on the weekly as well. There's probably the next stop is potentially going back into around 1675. This thing is just consolidating. There's so, regardless of the gold bulls out there, there is so much gold out there, paper or otherwise. I don't know how you want to look at it. You know, I've seen all the stories, shortage of gold and all that stuff. It's BS, in my opinion. Agree with me? That's my opinion, right? This market, whether it's being manipulated or whatever's going on, there's a lot of sellers in this market. I don't know who it is, but they're selling, they're serious, and they're not letting this market go out of the way, get out of its own way. So let's look at the weekly, and we had that big volatility spike, very similar to what we're having in the S&P right now, and we got into this sideways range. So we're trading down toward the lower end of the grid for the weekly. Take a look at that real quick. The lower end of that band is 1704 or 1722. We got S3 for the week on gold is 1719. So it's a low here on this thing. Low 1707. So we went down to STX. It spiked down there. And so we've seen it all the way down to the 1707. So we got pretty close to STX. And this is for the week. If we go on a monthly basis, just working the grid a little bit here, is what you'll see on that below 1721. The next number, that's what I was just saying, 1670s. That's very strong possibility. And we have the other number to watch up for on gold is that low of last month, 1706, and that's a big number, as we our low today was right down to that 1706 number. Take out 1706, you're looking at 1670 probably on gold. You know, there's probably a better short here than there is a long. Let's go over to silver real quick. I just want to cover the metals. Let me go to the daily silver. This thing's done really well. We got a nice buy signal down here on the 8th of May, down at 1550. It's done pretty well. This thing is starting to fade as well. We've got some support here. but it's definitely rolling over as far as the configuration goes. You see all the PPMs rolling over, and same. This has got a different formation than gold does. We're now just getting into that volatility spike, so we're likely to see the silver stay up in this range and work this grid. So, you know, hopefully we're going to figure out a way to get this grid on a bunch of markets out to you, so you folks have a way to use these numbers for other types of trading that you're doing. All right, just looking at, let's talk airlines just for a minute. Now everybody thought I was crazy. There's some folks that are Warren Buffett super fans. I'm pretty much Warren Buffett troll. I've never liked the guy for a long time. I've been around a long time watching this guy, and not a fan at all. And you know, when I did the video back on, I think it was the 8th of May, take advantage of his mistake. That guy sold the whole on the airlines, and I just want to mention, I know some of you have commented on the channel that you did these trades. If you did this trade, Allegiant, okay, this is where I want to start off, and I want to talk about these things. If you did this trade on Allegiant, this puppy is just about doubled, okay? It's printing 122. I made a comment, I think, on Twitter somewhere. I'm not sure where I put this stuff out. But anything over 120, you just want to take profits here. We printed up to 126 today. You just want take the money and run. If you got this one and you got it down here in the base, anywhere close to where this buy position came out on 5.8, that was at 75 bucks. Take it and run. That was an awesome trade. We got pretty close to the 200-day moving average. And the video I did the other night on talking about the airlines is that I think a lot of these are going to go toward the 200-day moving average. Originally, going back, Southwest was the dog. We got a buy signal here on the 18th, and it's just rocketed. The interesting thing is, and I'm going to keep talking about these grids today because it's important. We're looking at a potential for closing above the line right here as far as the extreme for the day. If that happens, you're going to get a 2 to 3 day pullback. I'm actually basically thinking you can take profits on these airline stocks. If you got some nice profits, bank them, man. Put them in the bank. Take it and run. And it was always about about the trade. I've seen comments, aren't you worried that the airlines are going to go bankrupt? Actually, no, because remember, the Fed's sitting there ready to back up any of these guys. They're not going to let them go down. You know, air travel is going to continue. That's why the whole trade that when Buffett sold out was just ridiculous. And I told this story before, but rumor was through some people I know that he was turned down by Treasury to get any kind of special deals with helping out the airlines, and he took his marbles and went home and basically sold out because the Treasury wouldn't give him a B of A or Goldman Sachs deal like he got in 2008. This guy has done so many of these sweetheart deals with the government. It's ridiculous how many of them he's done. So anyway, that's enough on Warren. But if this thing closes, I would take profits on all these trades. If you got big trades, hey, there's another opportunity. These things have got a lot to do. There are going to be issues, financial issues, and there'll be plenty of stories. But this is just really, really, really good. So Thomas asked, RSI for S&P is overbought territory. Haven't used RSI for about 40 years because it's pretty much worthless in my opinion. Uh, Overbought, oversold is probably the biggest fallacy ever. You're never going to hear me talk about that uh, as well. I'm not a traditional technician. Um, I've done all my own work. Everything that I've got here is really about the proprietary work that I've done, and that's what you're going to hear. So, no, the PPMs never get, they do get to extremes, but they don't get overbought and oversold. They measure the actual momentum, and there's probabilities attached to it. So I hate 0 to 100 meters. They get up to 100 stochastics. There's a lot of them out there that I'm just not a big fan of. I'd be more of a fan probably of an ADX or something like that if I were to use something. But the PPMs are measuring that angle of attack for the moving averages, and that's kind of how I get. But these things are not likely to kind of get. I guess as far as the market being overbought, sure it'll get overdone at some stage, and there will be some kind of pullback here. Um, Let me go down to the most recent comments here. Um, yeah, so question on Southwest LUV, as we were just looking at. Yeah, I think I'd take the money and run. There could be some more, so you could do a partial. If you're an option trader, you could throw some maybe a like put some out of the money puts against it and hold on to it, so at least you have some protection. But for the most part, I would stay. I would take profits if you got in well. If you got in down at this 25 handle level, something like that. These are just been a good trade. Like when I put that out there, it was about a trade. It wasn't about the airlines going into a bull market. But who knows what's going to happen next? Um, so um, so let's go. Um, Yeah, I'm just looking at some of the questions that Jay's thrown out at me. Let's take a quick look. We're going to switch around a little bit. We're going to throw the VIX up, and the VIX is just kind of, it's interesting because that black line that's on this page here is the 200-day moving average of the VIX. So we've come well above it. Now we've come back to it. So there will be a point in time. I think maybe at that between 3150 and 3180 on the S&P is probably going to be a point where we might finally see a reaction. And what it's doing though is, like I was saying, all of these moving averages, all the stuff that's going on is really that's the best way to put it. Uh, the market is extended, but it can stay like this. It doesn't have to react, and there may not be the big short that we thought there would be at one stage. So let's continue on. I'm just looking at a couple things that Jay's got up here. Um, Not sure what some of these are. We'll do some random stuff here. DSLV. Yeah, I think this question gets asked every week. Inverse silver. Yeah. The last time we had a signal was way over here. We were long it, and we got out. So there's really nothing there. Although PPMs are starting to turn up, so maybe there's something to go on. And yes, I am. I will do Bitcoin and Tesla here in just a second. But yeah, so this could be a trade now that I think about it. But I'm not sure how much these metals are going to go. But there could be a trade here right now. Don't see anything on the dailies. Let's do Bitcoin. Bitcoin's been kind of in this sideways range, although the last signal we had on Bitcoin was at 73.96, so it's up a couple thousand on this. It's still hanging on this trade. It hasn't let it go yet. PPMs are trying to turn up again. There was a time I covered this a few weeks ago that I thought we would see uh, a little more upside than we did. We kind of peaked out at that 10,000 level. And here we go just to a weekly chart. And you see PPMs 4.42. That's a huge number. 0.84 on PPM2. These are really positive trends in the underlying. If the market grid on this is telling us that we're probably pretty close to here to maybe a low for this week. We're looking at 92.90, 92.34 is S1. Probably pretty close to this being the bottom here. And the way we close on a weekly basis will tell us whether we're going to get back up at the upper end of this of the band here. And I don't see the grid being taken out. You can see R2 10,200, R3 10,563, and 10,877. So we're probably not going to get much beyond that. Let's do Tesla. I'm just going to go do a run on a bunch of stocks right now. Tesla went through its extreme for today. It's interesting. I showed you this last week. We got a buy way back here at 328 on a weekly basis. It stayed in this thing in spite of this crazy volatility. This is what we call our 3-2 model, and that's pretty amazing that it was able to stay in there. But this is getting a little frothy up here as far as the we exceeded this. If we were to close above 891 today, then that would tell you, and this is a weekly chart we're looking at, that would tell you get somewhere between 2 and 3 weeks of downward movement, probably head back to the lower band, and these bands are going to stay somewhat the same. They'll move up a little bit, but you're looking at the lower band is around 806, 792. Okay, let me go to daily, just a glance real quick here. Yeah, so this is interesting. Here's one of those grid situations I talked about. We traded, and 867 was the RXT, or the extreme resistance, 2 days ago. We closed above it at 898, and notice we closed down. This is the second day, probably one more day at least, maybe a couple more days. We should move back down toward the bottom of the band, which is going to print us down at 852, 843. Okay, I'm still working on Jay's list, AMRS. Interesting again. So this is a daily. See this close over this thing. This is pretty crazy. What is this? So what we're looking at is probably another day or so in a sideways mode, but this thing most likely, this was a climactic trade for this on a daily. We did have a buy signal down here. Depending where you own this thing, this thing doubled. You'd want to look to probably take some profits out on here. I don't know that with this kind of stock whether we'll get anything out of the weekly or not, but we'll take a look here. Yeah, so weekly up to the 200-week moving average. That was the whole party there probably for that stock. So if you own it well, that's probably something you can look to take that out. Yeah, here's let me just get one more CCL. Oh, good old Carnival. This is on a weekly basis. You can see we sold out of this thing up here at $46. And I had a long, it just failed, got out. Nice momentum. Let me click over to a daily just to get a feel for that. Sort of an airline trade, but not as good. Doesn't look, we've got a long here on a daily, but there's not really a lot there to take a look at. It may continue to improve. This is definitely for the gambler types. The airlines were a much cleaner play than this. Primarily is the airlines are, I hate to use this word, essential, where the cruise lines are not. And so let me keep looking at some of these lists here. Yeah, Jess Yates, if you're still on, yeah, it probably will go down to 19, fill the gap. We'll see what happens there on the VIX. I covered that earlier. Covered that. Let's look at DAL. I'm kind of all over the place, but this is kind of where I get on this stuff. I just want to cover a lot of the stocks. Here's the DAL. We're above the extreme for the day. So once again, I think these airlines, if you got them, take them and run, or take partials. Worst case, sell half, keep half, buy some puts against them, do something of that sort. All right, I'm going to go back over to I'm going to look at WMG. Jonathan just asked that. What is that? I don't even know. Is that something new out there? I'm not sure what that is. Oh, sorry, WMT. Walmart. Yeah, so nothing there, and let's take a look at the weekly on Walmart. Kind of stuck in a range. Did good. Most of the crisis is over. At least people are starting to look at stuff. Let's look at Softy, Microsoft, and this a weekly. Got a nice buy down here. It's starting to stall, but let's look at the daily, see if we can get something out of that. So, last trade, Microsoft on 429, still long. It's sort of working. There's not a lot here in Microsoft. It was a nice play off the lows for sure, and now we're consolidating. This is kind of interesting. Sometimes I'll look at stocks like this, and especially when they're major players and the high cap stuff. This may end up being what the S&P 500 ends up looking like, in that we get up near the highs and then we consolidate, and we'll see how these things will. Okay. So Jonathan, hey, WMG Warner, new listing today. Okay, that's why nothing came up. I have no idea about it. Good news is our models, actually, we put that in the database. I'll make a note to add it. It will actually be able to model it tomorrow, actually, and we can actually make decisions. It takes two days of a new stock to be able to make a buy-sell decision on it. So let's go ahead. We haven't looked at any financials. We're looking at B of A, and kind of a mess here with rates at zero. I don't know how these banks are going to do. We've certainly stabilized here. We've got the Fed backdrop. The Fed's. I saw an interesting story this morning somewhere that the Fed promised they're going to buy corporate bonds, but they haven't bought any. But they did buy a bunch of corporate ETFs. So in effect, they did buy the bonds, even though they didn't buy the individual stuff that's out there. So just kind of going through this thing just randomly, folks. SPG. Um, Interesting. We got a spike on a weekly basis above here, but no buy signals on this thing right now. Let's go to daily. Yeah, daily got a buy here on 518. Getting a pretty crazy day. I don't know this stock, Simon PPTY group. I don't know the stock well, but it's obviously seeing some serious acceleration. Let me put a let's put some price. Yeah, okay. So I put some price ratios on here so we can see if there's any upward objectives on some of these things. But we'll take a look. Looks like right now we've got upward objectives, high target 71 to 86 on this stock. Last trade here 63.45. So there's potentially a nice move on this breakout out of this pattern that we've been in. And no, I would not be short this market, not yet. It's a little early. Let's take a look at AMD. Yeah, I just noticed Paul Rizzo. Hey, Paul. Haven't talked for a long time. Should reach out. Anyway, yeah. So AMD kind of dead. Telephone. I actually hate this company personally. DirecTV. I actually am an AT&T customer. I hate them. Looks like everyone else does too. Let's take a look at weekly. Yeah, nice configuration. We're seeing a pretty good boost, but that PPM2 is a minus 1.01. That's going to be major resistance, 33.05, probably closer to 32. I would stay away from this puppy right now for sure. All right, I'm just still looking through stuff. Let's look at our Netflix. This is weekly. Let's go to a daily chart on this. Yeah, it's kind of a sideways range. I guess it got its bump early in April when everybody was sitting around watching Netflix. Not really. I don't see anything really here. If you own it, I'm not sure what any opinion on this thing. Yeah, and Turbo Fan Lover, I agree. AMD is a little late. I just don't see anything else. SDC. Smile Direct. Dentist, huh? Okay, yeah, we'll take a look at, yeah, we got a buy over here on the 28th. It's at 680, it's 869. These objectives up here, I'm glad I left these on. I wish I'd have put them on some of these other stocks earlier. $12 to $17 objective on this thing. So if you've got it, you probably can hang on to this one as it comes back in. So let's take a look at TDD. I'm kind of in the, if you guys got some last couple questions, we'll keep going. Here's another one of those the trade desk. We've got nice buy over here at 259, now 349. Objectives up above. They're not really, they've been invalidated, but I think there's still some possibilities for this thing to move up towards these objectives up here. Probably minimum objective 323. I'm sorry, 323. That's the high target. 393 on this one. That's yeah. So. Yeah, so casinos, I see last comment, Michael Medina got, let's see here, we got casinos, MGM, yeah, nice move. Listen, all this stuff is going to come back, you know, I know I was on record early on, but so was everyone. When this thing started off, nobody knew what we were dealing with. And now it appears that folks are willing socially to go out and be social. You know, human beings like being around other human beings. And I don't know that they can, I don't know that they can socially knock us down so hard that we don't want to be around other humans again. But they've made it so we sort of are hesitant around them, especially, you know, they've played it up big enough, and it does appear to be true. Older people like me have a higher risk of this thing than most of you young guys. 50 and under, my opinion, we should have let the 50 and under crowd run this country, and then just protected the older folks and not locked everybody down, because it appears that the people that got it were the older folks, and they weren't as protected as well as they should have been. So, but let's take a look at some of these stocks. You know, I always tell everybody I'm not Jim Cramer, but I can do a pretty off-the-cuff analysis here. Yeah, we looked at this trade desk already. Disney, good one. Yeah. DIS. Daily got a buy signal over here on 427, 106, doing pretty good. We're coming up to that 200-day moving average. That could be an issue. There's no Fibonacci projections above the market right now, but if we look at the if we go and look at the weekly here, see if there's anything out there. Yeah, we're right into the moving average grid, and we got PPM1 is plus 2.4, but we have PPM2 minus 0.92, minus 0.30 on PPM3. So these averages we're going to get sandwiched between the 21 and 40 on this. So you're going to be sandwiched between 116, 127. So depending on what you're doing with this stock, if you want to look at it, it's back above the 200-week moving average, which is a positive. I don't see any immediate trade here on a short-term basis or on an intermediate, but so that's pretty much that. Let's see here. Yeah, Amit, make sure you give me symbols. I don't know the symbol for Tyson, so if you get this, just type that in for me. Yeah, probably pronounce your name wrong, but Pivan. Now the PPMs are actually proprietary, so no, I can't give you that, but I will hopefully get you access to it on a platform that you can use. Yeah, let's look at shop. That's obviously been a big one. Let's take a look at the daily, because I think the daily trade on this was pretty good. Yeah, so there's been a couple here. Yeah, last trade that we got on here as far as the trend mode goes, 603, 766. I guess 160 bucks is a pretty good trade. Um, you're looking at another 20, 30%. There are so many, and you guys know this. There are so many of these 20, 30, um, 20, 30%. It's crazy. Um, somebody, let's see here. Jonathan says, uh, you're good on you're a good gold man. All I can tell you, man, is I've been trading gold since 1980. The first time it ran to 800, and I was always been good at gold. There just hasn't been much to do there for a while. Um, yeah, yeah. If you give me a couple REITs to look at, I'll take a quick look. We're going to go for about another. Last week we went for about an hour 15. We'll do the same thing again. So we're going to wind down. I'll just keep going after stocks here, guys. TSN, Tyson, thank you for that. Oh man, just trading under the 200-day, flatlined. Take a look at the weekly, see if there's anything there. Not a terrible, a nice base in this thing. Don't have a buy yet, but the next intermediate buy would probably be a really good one. There's no buy at the moment, but that's a nice looking base. You could easily get back above 75. You know, a lot of these stocks are going to be trying to get back into the range to prior crisis, and you know, we'll just have to see what happens over the next month or so. And you know, and I just want to, as we wind down here, you know, somebody's talking about they think the market's overdone. You know, yeah, what I think is happening here is what we're seeing in our database. We're at 30% long intermediate. My expectation is that we're going to continue to see a rotation on our intermediate database, which means more of the intermediate, these are roughly about 200 to 250 days that we're going to hold these trades. We're going to see more of those rotate in. And as you hang around the channel, hang around my work, what I'm doing, we'll get into more of the, I guess, more of the technical and understanding how the rotation database is really going to lead us down the road. And you know, a lot of folks, I've seen comments, and I try to get out there and participate with you folks as much as I can. And you know, people want me to be wrong. They want me to be right. They want me to be wrong. And what I do is I'm a trend follower. And you know, when we see these trends, I'm going to follow them. What I'm doing on this channel is just continuing to try to walk through day-to-day movements. Okay, what I'm seeing is likely to be the ebbs and flows, and with the backdrop that you have the position that you have, like a trade on, like if there's a model buy or something like that. So THA, oh, that's wrong. Let's do NVIDIA. NVIDIA has been long, interesting enough, all the way back in August of last year on an intermediate basis at 162. So we never, it's another one of those trades that the long-term trending continued. Let's go to the short-term, see what we got there. On a daily basis, the last trade was on 5/4 at 291. Currently trading 349. There is a new objective that just got kicked out. You'll see up here High targets 406 to 439 range is a potential for this thing. So it looks like it's going through the sideways configuration. The key support 334, and so as long as it stays over there, um, let's see, RGR. Yeah, so RGR, we got a buy on that at 53. It's currently 66. Traded below. There's no rule, by the way, on the when. Typically, I shouldn't say there's no rule, but typically we're below this on a daily today on the downside. We're probably going to see, usually when it gets to the extreme, it's going to come back into that band. So look for sideways on Ruger on a short-term basis with that range of looks like 52, 52.49-ish is probably going to stay in that range. We'll probably hang on, I got the wrong numbers. There we go. It's going to be 74 to 67. I clicked in the wrong place in the chart. We are seeing PPMs roll over, but we got a 0.96, 1.22, and 0.60. So the moving averages that are down at around 63, 64 is going to be your major support there for sure. Yeah. Yeah, guys, don't forget to smash that button. You're right. Thank Robertus. That's awesome. Yeah, Andre, how you doing, man? I see you on the channel a lot. I appreciate your participation. Yeah, I mean, like I said, you could take partials here if you got in well, man. Just take them and run, especially Allegiant. That one's just that's close to a double. They don't get much better than that. But as far as there's still upside on those, and you could look at the 200-day, and like I suggested earlier, is that what you probably want to do is maybe I wouldn't use a stop, but maybe buy some out of the money puts against a position, take a partial, and depending on what you're trading, take half off and let it run, and use some of the moving averages and stuff that are out there. Those of you that watch the channel, I use 10, 21, 40 period moving average, conversation for another time, but those are the averages that I use, and so you can just really kind of watch all that stuff. So I'm going to wind down. Let's just see here. I did talk about Bitcoin. The replay, I think it takes about 20 or 30 minutes once I finish this live stream that you can actually go back and watch this, but probably about 35, 40 minutes in on Bitcoins. And that would be, so we're going to look at the financial spiders. This is going to be the final symbol, man. This is it. Thanks, Jonathan, for the comment. Really appreciate it. So what we're going to, this is, you're looking at XLF, we're above the extreme today. These financials are probably going to continue to do a little better. Everything, I made this comment earlier and when we started, is that a lot of these stocks, everything is seeking that 200-day moving average. Whether they can get above their 200-day moving average or not is a thing that that you can, we'll just have to see how everything plays out. But a lot of stuff is moving toward that number on almost all these charts. I said this, I remember weeks and weeks ago, even on a nightly broadcast or on one of the live streams, is almost so many stocks, so many of these charts look exactly the same. So I guess when this party ends, everything's going to roll over together. Um, there's no, I guess there's no way around it. So all the charts look the same. So when we do finish this rally, we do get to a point, then we're going to see a pretty good roll. And what I'll be watching for is on our database is that short, when I was showing you earlier the database, it was the 85% on the dailies. We're going to start to see that thing roll. When it starts to roll, I'll make sure to bring that up on the daily commentary videos and all that stuff. And if you're still watching, appreciate everything. And I'm going to quit right here. But make sure you share this stuff. And I think Jonathan said, I hope this channel blows up. I'd love to see this thing really get popular, because I think we're going to do some really some serious work together, guys. What I want to do is build this community up so we can all make a bunch of money. I spent my entire life helping people, teaching traders. I've had some crazy good mentors. I've traded with some of the largest traders on the planet, and I've seen things that most of you will never see, and I'm trying to share that information with you. So I know it get kind of corny. I share my 40 years of experience. It's actually 41, so I round it off. But anyway, folks, thanks again for watching, and we'll have another video tonight. So I'll cover what the expectations for S&P is, and anything that hits my radar screen. So thanks again for watching, folks.